The markets are on edge as we head into the Fed's meeting day. But what are the candles really telling us? Volatility, set for a major spike. Dollar index, signs of a technical bottom. Are we repeating history? Bond yields, gaining momentum, ready for the next move. Commodities, oil on the verge of a plunge. Natural gas holding the line. And gold, one critical move bull must make this week. US indices, the S&P 500 and Nasdaq under a multi-angle evaluation. Are they setting up for a breakout or a trap? S&P 500 sectors and large stocks. Key technicals you can't ignore. Special features of the day. ASX and NIFTY in focus, plus a live Elliott wave analysis of Costco. Where is it heading next? Stay tuned, because we also have a tricky quiz question lined up for you today. Are you sharp enough to get it right? Drop your thoughts in the comments, smash that like button, and don't forget to subscribe and turn on notifications so you never miss a key market update. Now, let's dive into the charts. And as usual, we start with volatility. Volatility candles were quite conclusive today. First of all, both of them are bullish, although they require confirmations, but nevertheless, they are bullish. And I'd like to mention that both of them pushed the price above the 20 days EMA, and which is significant technical event for now. So the daily candle for volatility index is a bullish harami that requires a confirmation. And for the futures, it is a piercing line, also a bullish reversal formation, but also requires a confirmation. Now, if we look at the slightly bigger frame, what we are seeing here is the potential also bullish formation for the 2-day frame. It is a possible matching low. You can see that the lows are almost ideally aligned here, and there is a chance of a reversal in the next 2 days. And speaking about this one, this could be either ladder bottom or a deliberation formation. So it's not extremely bearish, but it's not bullish either. So it's more like neutral and requires a confirmation. So that's the perspective for the volatility. And I would like to reiterate that both daily candles closed with bullish formation. So if they confirm tomorrow or in the next couple of days, it will be huge. Now let's move on to the dollar index, and this is what we are seeing here. So first of all is the daily frame. So the picture here that I charted a couple of days ago, last week, I said that dollar is either bottoming or it's already bottomed. From the perspective of technical signals, the technical footprint is very similar to what we had here. So this is this very close proximity, and if this is the chance, then we will see the dollar index bottoming here maybe for another month or maybe immediately after. So that's this is not clear for now, but I'd like to say that the dollar is oversold right now, and the chances for a move higher are significant. Although it might not happen immediately, you might need to look for a couple of weeks until the bottom, like a big one, forms, and we will move higher. And this one is a very significant event today. So I already mentioned that dollar was forming a ladder bottom, this one, the 3 candles, and today's candle is critically important. If it closes below this level, which is the low of the preceding candle, then it would be a continuation downward. However, if it fails, it would be a super failure, and the chances for bullish reversal will be quite high. So we are watching. The dollar closes in 1 hour 39 minutes. Now let's take a look into the Treasuries department. what we are seeing here after yesterday's quite strong move by short-term bonds, today it's most likely a pausing day, and the chances for a continued move higher are significant. The 10, 20, and 30 years, they actually took a pause, and they were not able to form very strong bearish candles. So most likely these are somewhat neutral, and we would be looking for the next couple of days. And what I'd like to say here is that if we look at the 2-day frame, for example, for 2-year yield, what we're seeing is a clean bullish sequence. And in 8 minutes, this candle will close most likely as a bullish one. And if we look at the 10-year, the same, no, not this one, I'd like this one. Yes, this one, 20-year yield, which is a TLT counterpart. What we are seeing here is the strong bullish candle on a 2-day frame, and now we have two tiny dojis, bearish dojis, but now as they are two of them, they become bullish. And most likely these are just a setup for rising 3 methods or rising 2 methods. It's not significant, it's not important. The important thing is that these two are now bullish. And this would align well with 2-year and the other yields. So that's the perspective. And what is concerning though is that this one, this is our spread between 10 and 2-year yields. And what we are seeing in the last couple of days, that this is turning strongly bearish at this moment. And if you read our weekly report, I discussed this potential doji, gravestone doji, which might lead to very unfortunate consequences. So this is what is happening right now. And this, the chart on the right, it's a 2-day frame formation, and the candle, 2-day candle, is closing in 6 minutes, and it's gonna be a tower top. And this is indeed concerning because the very close proximity to the zero line. Well, we'll keep this in mind, and we know that at times of uncertainty, investors tend to favor short-term bonds versus the yield versus the long-term ones. So we'll see how it plays out. Now let's have a look at our Elliott wave for the 20-year yield. The chart remains the same, nothing changed here, so we are still expecting wave to move higher, although there is a possibility that this alternative 2, like a bigger wave 2, will complete first, and then we might see a strong move up. Because the first wave here was an impulse, and we need to see a continuation here. That's the perspective. Now let's move on to the TLT itself. The chart has been unchanged for a couple of weeks already, and we cleaned it up, and now we can see that this wave is clearly corrective. The wave that TLT is forming upward. So this is this wave I'm talking about. So this is either potential wave WXY of 2, or it could be wave 1, wave 2 of wave 3. Let's see, that's it's still not clear. Potentially they can be both. And at the same time, we are still tracking a possibility for a bigger correction, ABC in purple. So alternative A is almost improbable at this moment. And speaking about the candles try to make a reversal here, but unfortunately both 2-day frame and both daily and 3-day frame formed thrusting lines which are considered a bearish continuation candles despite their size. So what is important there is overlap between the red and the green candles. So far this is bearish and this is bearish either. So the weekly frame is somewhat neutral. We are still seeing that bears are trying to negate this green candle. So far we cannot say it's rejected or confirmed. So it's neutral pending confirmation. And the final one for bonds, I'd like to show this. We are just 13 days before the closure of the quarter. And this is the quarterly chart. And what you can see here, so the candle, the quarterly candle so far is bullish. It's most likely a consolidation candle before moving higher. So if yield doesn't move strongly lower, the quarterly formation will be bullish, and you know what it means. So this chart, if you want to see it, it is pinned to my Twitter profile for 2 years, over 2 years. Now let's move on to the commodities section. Oil. As we discussed yesterday, oil is bearish, and no surprises today. We saw that it tried to move higher, but it lost steam and now moving lower. So we have one hammer, another hammer, and now we are back below the 8 EMA. The same for the 5-day frame. It's most likely it's gonna be a bearish continuation candle here, and for the weekly, unfortunately, it's still 3 days to go, but it looks like the weekly already used its bullish path, and now it's reversing and moving to lower lows. That's the candles perspective. And speaking about the chart, Elliott wave chart, I made small modifications here. Yesterday I mentioned that I'm seeing 2 or 3 different impulsive structures, and I decided to go with this one as it mostly supported by several technical indicators. So we are here, wave 1, 2, 3, 4, potential pennant, and this is potential target for the pennant. Slight adjustment if you look at the charts that we discussed yesterday, but nothing big, nothing really significant. Now if we look at Brent, what we are seeing here, one event I would like to highlight here. So daily is aligned, 2-day is also aligned, and it's gonna be closing bearish most likely in 2 hours. What is crucial here is that 1 month, the monthly price is pushing below the 100 months moving average. So the last time it happened here in 2020. Unfortunately, I don't have very long data here, but based on the previous another chart, so this is somewhere here, and we remember how it ended. So for those who don't, Brent was 15.325 in April 2020, after the break through the 100 months moving average. Let's see how this month ends and what kind of impact it will bring. So far, something to keep in mind. Now, after discussing one energy, let's move to another energy source, natural gas. Despite all being bearish, natural gas remains bullish, and this is the chart that we discussed last week potentially, and so far we are seeing that natural gas is beautifully holding this line 3.955, and as long as it stays above this line, there is a good chance for a move higher, and this would be an amazing rally. So let's see how it closes the week. And speaking about the candles, I cannot say that they are strong bullish or strong bearish, so they are still neutral, but I'm amazed how well natural gas is holding the level. So far, there is no confirmation in either path for either path, and the weekly frame remains bullish, and it is holding above the 200 weeks moving average, which is a red line. So far, this is all good. Now let's move on to gold. And in the announcement earlier, I said that gold bulls must do one thing this week. So this is the weekly chart, and this is an RSI. So if RSI doesn't make a higher high here, well, it would be a very strong potential for a reversal. And this is something that gold bulls must do this week. If they don't, well, that could be a big trouble ahead. So far, everything looks bullish. The only thing that on daily, weekly, and other frames, gold is strongly oversold. How long will it stay? I don't know, but the risk of reversal is quite high. And if we talk about the chart, this is the perspective. So far, gold looks like it completed wave 3 of a larger impulse, potential larger impulse. Let's see if it makes it. And now there is a good chance for a little pullback, and we will see how it handles. So, and the last one I'd like to show is this one. This is the GOD, and this is the candle the GOD made today. I would say it's a very good candidate for a reversal and for an evening star doji or some sort. So that's the perspective, and from the monthly perspective, bulls must close above this line, which is the February high. If they don't, it will be a bearish. That will be a bearish closure. So far, everything is bullish, but we are waiting for a reversal candle. Now, let's wrap the commodities section and move into the indices. So, as we discussed yesterday, the rally that we were seeing was fairly short, and the expectations were that it ends in the next couple of days. So it ended today, most likely for sure. And what we are seeing, a strong bearish candle for S&P 500, a strong one for Nasdaq, for Dow Jones and the IWM or so. The candles were not that strong from the candles perspective. However, they are both bearish, and the chances for a reversal now are fairly high. And I would like to emphasize this particular thing. This is the 50 over 200 days moving average death cross. That is likely going to happen tomorrow or the day after. And the Russell would be the first one to record this event. Now let's have a look at the bigger chart. This is the 3D closure today. Remember, yesterday we discussed Nasdaq, and we said that in order to make bullish candle, it needs to close above this line, so it failed. And honestly, all the 4 candles here are total failure. So they had chances to close above the high of the previous red candles, but they failed, all of them. And this is not a good sign. So now let's have a look at Elliott wave. So this is our Elliott wave that we've been tracking for since February 23rd. So far, we were expecting the wave to push it higher and reverse somewhere here in the rectangle area. If now it continues lower, it will be wave 5, and so far the wave down looks impulsive. Now let's have a look at the sectors. So what we are seeing here is very strong move, bearish move by the technology sector. Fairly strong candles by consumer staples and industrials. Financial is also not bullish at the moment, so it's at best it's neutral. Let's see what does it tell us in the next couple of days. Consumer discretionary are bearish, and the energy is also likely bearish. So the chances for some sort of reversal or at least a pullback are fairly high, considering the size of technology, industrial, and consumer staples. Now let's take a look at the large stocks. Microsoft is bearish today. Tesla is bearish. Apple is moving lower, and Google is clearly bearish. If you're interested in details, and today we issued a few dozen of different calls on our private Discord channel, and if you're interested, you can join it through our website investingangles.com, and the package for Discord for stocks and individual stocks and for crypto is only $10 around 4 months. This probably not gonna last. Let's see. Now let's move on to Nasdaq. This is our chart that we shared with our subscribers in our weekly report, saying that Nasdaq has a good chance to move towards 20,000, and after that it will likely reverse. This is exactly what happened. So it pushed just a little higher, made it to 20.20066, and now it is falling, and falling in an impulsive fashion. And if you are our subscriber and you received yesterday this chart and our daily report, that you would know what to do. So this was an impulse that Nasdaq made of the top, and now what we are looking is for a bigger impulse, and this is likely gonna be the good chance. So this is wave 1, wave 2, potentially wave 3, 4 complete, and now we would be looking for wave 5. Let me make it slightly lighter. So this is the possible wave down that we would be looking for tomorrow, or maybe overnight. Depends on how agile Nasdaq would be working with its futures. Okay, so now let's move on to so that wraps up our indices and our regular updates. Now let's move on into the special features of the day, and we'll start with Nifty. So this is our chart that we've been tracking since October 18. Yes, you hear it right, for 5 months. So when we said that Nifty formed a fairly significant top, and we were expecting it to move towards 20,000 or something. And this chart we shared a little later with the targets and the perspective waves. So far, Nifty has been tracking it very well, and right now it's right in the middle of our target for wave C, potential wave C. So far, let's see how it develops this wave. So this wave could be an impulse if it makes an impulse, or it could be the beginning of a bigger wave B of the correction. However, at this point, we cannot reject the possibility that this was wave 3, this is going to be wave 4, and the Nifty would complete an impulse down, impulse of a larger size. And if we look at the candles, so far this is the daily frame, and it looks bullish for now. Let's see if it develops into something more significant. If we look at the weekly frame, this one, the chances of a reversal are fairly high. If Nifty holds it above this line for the next 2 days, it would be a bullish reversal. The higher it goes, the better it is. However, I would like to emphasize that this one is still holding us, and this is the 10-day frame, and we had a strong moves here, strong crosses, and this is our statistical estimate. So we were having potential cross and potential target here if Nifty makes a 37% average decline. So if let's see how it goes. So far, this 10-day frame, it is very bearish, and so far we are not seeing any reversal sign. But it might start small with the daily and weekly. And the final here for Nifty, I'd like to reiterate here. This is the chart that we shared way back in October, saying that Nifty is done, and we would be looking for this particular move. Right now, this could be a zigzag that Nifty completed, and we might see a start of wave 5 here. However, we still need to see the first impulse of the bottom, and I just discussed it in the previous chart. And if this theory doesn't work and we are seeing a failed impulse, then we might even see this particular perspective. So this is an even bigger chart, and this is the worst case scenario that I'm also tracking. If Nifty fails to form any impulsive structure, then we might see a bigger decline, and it would be 37% of the top here. So that's for Nifty. Now let's move on to the Australian index. So what is here? No surprises. It's moving lower. Bearish candle on the daily frame, bearish candle on the 3-day frame, and the weekly is likely to close with the bearish candle as well. So for the monthly frame, we have a very strong resemblance of candles build up, similar to what ASX did in 2020, in 2021, and now in 2025. And this is the biggest concern of all. This is the MACD bearish cross on the monthly frame. And if in 13 days it's not reversed, it's going to be a big impact on the index. And speaking about the Elliott wave chart, this is our call on ASX in February 23rd, when it was 8,300. Right now it lost about 500 points, and it's still a good chance to lose another 1,500, because this one is an ending diagonal and potentially even a double ending diagonal, because wave 5 is a diagonal itself. Well, this is the perspective for the ASX, and if bulls down under need to do something, they must work hard and work fast before the end of this month, before major damage is done. And the final discussion today is Costco, the feature of the day. So when I saw very strong consumer discretionary bearish indications, I looked for the biggest contributors, and this one technically was very interesting, and I'd like to share it with you. So assuming that Costco made a big bottom here, and I started looking into the wave and found that this is a very interesting formation. So first of all, this particular formation is a triangle, and I tried multiple techniques here, and most likely it's a very nice and technically supported triangle. So from that perspective, we have wave that started not here but somewhere. So this is 1, 2, 3, 4. This is the start of the wave. So if we look at this, then we have wave 1, we have wave 2, we have wave 3, and we have wave 4, and here it's wave 5. The interesting thing about wave 5 is it is a diagonal. So it's an ending diagonal. It's an expanding one, but nevertheless it's valid, and too many overlaps and everything. So what we know about ending diagonals is that they tend to return to the level of origin. So I think that this level is 793.00 is a point that we would be looking for. So so 793 is our target for the current move. This is the minimal move. And what I also would like to say that the triangle here, the triangle of this size, it's a very significant event. And what we know about triangles from Elliott wave theory, the triangles almost always, I would say always, because I've never seen it in a different way, it's always appear as wave 4 of wave of a larger degree. So this would be the counts 1, 2, 3, and this would be wave 1 of a bigger degree. And let me zoom out. So that's the wave I'm talking about. So this is potentially wave 1, potentially wave 2, wave 3, 4, and this is wave 5. Now let's move on to the previous one. So that's the perspective. And if we are looking for wave 1 of this could be even a super cycle based on the number of years and the length of the wave. So I even consider this as a end of a super cycle. So this would be a super cycle wave 1, and this would be a super cycle wave 2. So what we know about waves 2, that they tend to return to at least 50%, of the length of the entire wave 1. 50% to 62% is the most typical area, target area for these waves. So that would be my perspective for Costco. And obviously we know that wave 2 wouldn't be a straight line. I would be expecting something like this. So this would be wave 1, wave 2, A, B, and C. And let me change the color. So color, and we also change the degree to cycle. Let's make it bigger. Oh, this one. Minor. Yes, this one. Okay, so that's the perspective for Costco. And I would say if we see it breaking 793, I would say that we're probably gonna be looking for this one. And the targets for this, oh, so this one. So this would be the target 1 and target 2. And speaking about the loss, as I said, it's about 50%. Yeah, so it's 50% loss here and 62% loss here. So that's the perspective for Costco. So mark this chart, target this video, and let's see what happens next. So the Fed's decision looms and the markets are lining up for major moves. Are you prepared? Volatility is coiling and ready to explode. DXY is showing historical bottom signals. Bond yields are positioned for a strong push. Oil and gas are sitting at critical levels, and gold has just one job this week. US indices. Is this rally for real or a setup for something much bigger? What's your biggest market takeaway from today's analysis? Are we setting up for a major shift, or is the market playing tricks? Let's hear your thoughts in the comments below. If you enjoyed this breakdown, smash that like button, subscribe, and turn on notifications so you never miss a crucial market update. And bonus alert, our latest weekly reports on indices, commodities, bonds, and top stocks are now live. Check them on our website for deep dive insights. Stay sharp, trade smart, and as always, happy trading.